The market opening, and that's the first opening tick that you're seeing for the week. Looks like it's going to be a positive start, and then perhaps we'll build on to it. The first tick on the Nifty is up about 30 odd points. The mid caps are doing better. It's a 100-point gain already, and the bank Nifty is up about 45 odd points. So decent opening, you'd have to say, in the green, but not too much. So flitting between red and green. Let's take a look at the top gainers. You have NTPC, which is your big gainer. Despite a subdued set of numbers, the stock is trending in the green. Power Grid is up almost about 1.5%. It's in, okay, 0.5% now. It's in the news as well. Metal stocks are doing well this morning. JSW Steel, Hindalco in the green. Tata Motors is up about 0.5%. In fact, all auto stocks are well in the green right now. Tata Motors, Hero, a couple of others as well. Bajaj Auto also trending in the green. And then you have Pharma. Pharma has clearly been the flavor of the last many days. So Dr. Reddy's up almost about 0.3%. What's dragging the market this morning? And now, by the way, the Nifty, Sensex and Bank Nifty have moved a tad bit into the red. What's dragging is Asian Paints, down about 1.5%. Apollo Hospitals, HDFC Life, Divi's Labs. So a little bit of profit taking is what you're seeing in the pharma space. Titan comes out with numbers this week, down about 0.5%. Eicher Motors comes out with numbers this week, down about 0.6%. HUL, Bajaj, Finserv, ICICI Bank, a couple of other stocks that are in the red. So largely, you would have to say quiet opening. By the way, Gland Pharma is one stock. The US FDA has cleared one of their units. So Gland Pharma is the one that's soaring this morning, up almost about 8%. And of course, Surbi will take us through the rest. But I think it's just the mid caps that are in the green, a record high there. Otherwise, the frontliners are just very quiet.
Yeah, and the clear trend today is weak financial earnings. Look at Piramal Enterprises, 6% down, DCB Bank, 3% down, SBI Card, which was a huge disappointment, as Abhishek was telling us, down 3.5%. M&M Financial continues to sell off, 3% down over there. UCO Bank is down 1%. So these are the weak financial earnings. But for this, you have a five-star finance that makes up. So some of the more smaller, more micro numbers on the NBFC side, they've been better. And five-star finance is definitely one of them. 9% up on five-star now as we speak. StoveKraft came out with a good set as well. So 4.5% up over there. Let's look at United Breweries. It was a pretty uninspiring quarter for UB. 2.5% down on that stock as well. So these are some of the early result reactions that are playing out. The stock that I was just referring to, Power Mech, is actually up 15-16%. Here a 20% circuit. Now the circuit's opened up. That's because of that gigantic 30,000 crore rupee order that they've got from SAIL. So these are the early stocks in news. RVNL reacting positively to the fact that they seem to have the contours of the JV in order now. So that's a 1.5% up move. And Siemens is up 5%. As shareholders have shot down that proposal to sell one of the business units to the overseas parent. Otherwise, on the Nifty, fairly quiet, not much headway. Bank Nifty is also in sync and in step with the Nifty, down about just 0.1, 0.2%. So Prashant, on the index, at least, there doesn't seem to be too much clarity. I guess it's more about getting through individual stocks, news, earnings, and the reactions to them.
Absolutely. I mean, we've got about 40-point lower start on the Nifty, 19,600 or so is where we are. I think we've gotten through bulk of the stuff which is moving around. Piramal is the big one, really, I mean, on the downside. And it's got tremendous volumes as well. So it's down a full almost 7% now. Look at that, on very large volumes for this time of the day. SBI Card at number two, and you got M&M Finance. Intellect had a big day on the upside on Friday. It's pulling back a little bit. M&M Finance, HUL is down a little bit. Asian Paints is down about 1.25%. Apollo Hospitals is down about 1.5%. HDFC Life, Divi's Laboratories are some of the others which are coming through with cuts. United Breweries, by the way, was a disappointment. The numbers came out, I think, on Friday, was it? It's down 2.5 this morning, right at the word go. So yeah, just a few names. Standalone refiners like MRPL, etc., are selling off as well this morning. So it's a mixed kind of a start with, of course, I mean, the big gainer on the upside being Siemens and Five Star, which are up 5 and 10% respectively. So that's the start that we've gotten with this morning. So 30 points lower, neither here nor there. Saurabh Mukherjee is joining us now. He's founder at Marcellus Investment Managers. Saurabh, good to have you with us here. Thank you very much for your time. I mean, it's been an incredible first half this year. Saurabh, I think, has gotten most people, I would say, right? I mean, as compared to what people would have thought this year would pan out in January as compared to where we are now, pretty much at all-time highs. What's your overall kind of picture? We're talking to you after a while. How are you looking at things from here out into the second half of this year?
Look, I think from a macro growth perspective, this is one of the most remarkable junctures I have seen in India's development. We're at the top of the rate hike cycle, and yet you have GDP growth of 6.5%. We're at the top of the rate hike cycle, yet large lenders, the HDFC banks, the Bajajes of the world are posting 30%, 30% earnings growth, 20 to 25% loan book growth. So it's a very unusual macro cycle where the rate hike piece doesn't seem to have dampened the economy. There is some dampening in consumption. So if you through the result season, you can see some dampening in consumption. And as you'd expect, given that the Americans have hiked by 5.5%, there is some dampening in the IT services. But in the context of steep rate hikes in the space of 12 months, I've never seen anything like this in my life, where the whole world rates have gone up and yet economies are chugging along nicely. So if you then look forward over the next couple of years, Prashant, the likelihood is rates come off. China seems to be in a proper deflationary cycle. The Chinese economy seems to be blowing up. That will exert massive deflationary pressure. So I think interest rates come off over the next couple of years, and therefore you get GDP growth upticks the world over. That should be good for stocks. That should be good for equity markets. And my suggestion to whoever's watching is, if you still haven't deployed meaningful amounts of your net worth to Indian equities, it's worth considering this as a good juncture to do so.
Okay, well, by the way, for now, although the market is very quiet, there are plenty of stocks which are looking good. Five-Star Finance is getting a 5-star reception in the market, 10% higher now. Very good growth coming through. Then AUM growth of over 43%. The active loans have gone up by about 40%. So that's definitely one of the stocks to look at. And, it has a lot of the sort of peer group in that category this morning. So whether it's Chola Finance, Ujjivan Small Finance Bank, a lot of these ancillary names as well doing well. Saurabh, hi, good morning. So if this is the place to be, if India is the place to be despite the kind of run-up we've already seen, where do you generate alpha now? Where do you see the next leg of leadership emerge from?
So look, I think we're sticking to what we understand well. So I started by mentioning the large lenders we've invested in. They're doing well. Our reading is the lending space is consolidating, whether it be private sector banks or the large NBFCs. The large are getting larger in the NBFC space and in the banking space, and we are riding with the leaders here. Quick disclaimer, my parents, myself, our 10,000 clients have large positions in these stocks that I've mentioned. The second area where we've been constructive and we see more grounds to be constructive is the whole pharma ecosystem. There's consistent news emerging from America of drug shortages in America. It's not clear why America is facing such acute drug shortages. We'll have to do some more work on that. But one hypothesis I have is APIs. China makes 80% of the world's APIs, and I think China is conking off on that. That gives a great opportunity to India, which accounts only for, say, 10% of the world's API. It's a big opportunity for our API manufacturers to step up. The specialty chemicals which feed into the API ecosystem, I reckon will do well over the next couple of years as China tries to squeeze the global API cycle. And the third area where we've been trying to make some investments, hopefully we'll get some more opportunities, is the China plus one place, right? So APIs is one part of it, pharma is one part of it, but the other aspect is making electronic items, consumer durables, both for the Indian market and for the export market. China has been the dominant player in this, but the early signs from our trips to Hosur and to Chennai suggest there's a significant outsourced electronic manufacturing services industry emerging in our country, and we'll try to make some investments in that space.
Well, Saurabh, hi, good morning. I just want to go back to financials for a bit, a slightly sort of more medium-term question here. We know that, of course, Marcellus has had positions in the likes of Bajaj Finance for a very long time. You've liked that company, liked that business model. But this is a space that's not perhaps set up for disruption because we have a massive entrant coming in the form of Jio Financial Services. They've already launched a tie-up with Blackstone, for instance, on the asset management side, even before starting operations on the ground. So what kind of disruption are you right now penciling in? And at least in the near term, could it have implications for maybe, limited margins or, any other challenge in terms of business growth?
I think let's break financials up. There's plenty of different bits to that space. The mutual fund space, right? The data from America is very clear. If you look at the last 20, 25 years, led by Vanguard, BlackRock, and State Street, the American mutual fund industry has largely become a play on passive, on indexes and index funds and and ETFs, right? And if you look at the last 10 years, I think there have been outflows, even though the American stock market's done well, there's been outflows out of active asset management in America over the last 20 years or so. There is no reason to believe our country would be different. I think both the re-entry of BlackRock with Geo, I'm sure the other global passive players will enter. You can see every domestic mutual fund also launching passives. I think the big story of the next 10 years will be a relentless rise of index funds and ETFs in India, which is great news for your viewers. The cost of investing in India will come down. The cost of investing in a ETF or a passive is as low as 5 to 10 bips rather than say 2% for active asset management. So I think the mutual fund industry will face a profit squeeze. I don't think there's any two ways about it. The mutual funds will have to work very, very hard to grow their profits because of the pressure on their yields. The lending space is a different ballgame altogether. Over the last 20 years, we've seen it's very difficult to set up a large, successful lender, whether in banks or in NBFC. Player after player has struggled because to build a credit underwriting engine which holds its quality, builds distribution, generates, say, 20% ROEs, has turned out to be close to impossible. So if you take the last 20 years, there's only been really two successful NBFC build-outs in India, Bajaj and Chola. I have no reason to believe that Geo will not be successful, but even if they are, the capital they're bringing in accounts for 5% of the NBFC industry. So there's plenty of space. Remember, HDFC is no longer an NBFC, so there's plenty of demand for NBFC paper. I'm sure Geo will be able to slot into that space, but there is a deficit of well-run, large, well-capitalized NBFCs in India. I reckon Geo will slot into that and do well. But the data for the last 20 years suggests you need a well-capitalized parent and high-quality management team. Chola and Bajaj have played that, have executed on that playbook. Others haven't succeeded. Hopefully, Geo will be the third such player in India. But we need more well-capitalized players in NBFC. I don't think there's any dearth of demand. There is a dearth of capital in NBFC space. My reckoning is Geo plugs that.
Saurabh, what have you been sort of doing at Marcellus in terms of any new ideas, any new picks, making it clear just for educational purposes, not to, get people to buy in. But what have you been doing?
So we've got a few picks that we are working on building positions, and I'll discuss those as both the research crystallizes in our head and the position building plays out. Over the last 3 months or so, we've built a meaningful position in Metropolis Healthcare. In our large cap product and consistent compounders, we've been long-standing holders of Dr. Lal Path Labs. And I'm delighted to see that with the private equity players now pulling back to see lack of capital. I'm delighted to see both Dr. Lal and Metropolis hiking prices. Metropolis is part of our small cap portfolio. Dr. Lal is part of our large cap portfolio. We, much like Dr. Lal is strong in northern and eastern India, we think Metropolis is the strongest player in Western India, well-established, highly profitable player. And as the PE funded players pull back, I think we'll see a recovery in profitability for the sort of well-established Path Lab plays. In parallel, we've also built a position over the last 3-4 months in Prudent, which is a sort of a mutual fund distribution insurance distribution platform. The massification of financial services, in a way, the massification of financial services that Geo BlackRock will deliver. Already local distributors, local wealth managers like Prudent have delivered on this over the last decade or so. I think there's a lakh or so touch points through which products are sold, packaged financial services products are sold. So Prudent is a small cap company, but we think given the network of distribution it's built in the country, given the underlying financialization, this is a straightforward way for our clients to benefit from the rise of mutual funds, the rise of health insurance, life insurance in the lives of ordinary Indians.
Sure. All right. Saurabh, we would have loved to chat some more. We perhaps will take this to another discussion. Thanks a lot for joining us on CNBC TV18. Always appreciate your thoughts here. Well, that's the word coming in on the market, which, by the way, is very, very quiet. Not doing anything at all up until now. Flat on the Nifty and on the Sensex as well, holding on to that 66,000 mark. So gives us some time to do an exclusive conversation. Now, RVNL, as you just heard from my colleague Vivek, has reached an agreement with its Russian partner for the Vande Bharat order. So there is a lot of clarification that has come out on that front. The company's arm, Kinet Railway Solutions, and the Russian entities have finalized the partnership terms. So Rajesh Prasad, who's the Director of Operations at RVNL, joins us now to talk about that. Mr. Prasad, thanks a lot for joining in. If you can just give us a little more granular details on this entire partnership. What is the bid amount? What is your share in this partnership? What is the Russian partner share? And if you can give us any more clarity on what is the kind of timeline that we are looking at.
Very good morning to all of you, and it is always nice to get connected to a esteemed TV channel. So you are asking about the 200 sets of Vande Bharat trains that it tenders. This is basically a modernization of coaches. Today I was going through a newspaper and where I found that Ministry of Railway is trying to basically renew these 800 old coaches. These Vande Bharat coaches are having better safety parameters, more comfortable, they are faster, and aerodynamically it is designed. It has got faster acceleration, faster deceleration. So we have got a contract of 120 train sets and at the rate of 120 crores, and these train sets will be manufactured at Latur. This has got the comprehensive maintenance component, and the average cost is around 4% every year for this 120 train sets. So as you have said correctly, that the shareholder agreement, AOA, etc., have been signed on 28/7/2023, only few days back. And if you recall correctly, we had signed the share purchase agreement on 17th of July. And you mentioned about the Kinet Railway Solutions Limited. This company was incorporated in April 2023. So now the shareholding pattern is that MWM is having 70%, RVNL is having 25%, ALES is having 5%.
Mr.
Now
Prasad,
you have asked
Mr.
about the roadmap.
Sure.
Mr. Prasad, if you could allow us to please come in over here. What we are also trying to understand is that the understanding in the market was that you were trying to increase your share in the JV beyond 25%. Originally, it was 25% with the Metro Wagon Mash at 70%, but you were apparently trying to increase that share. Is that right? And now is this final, basically, that your share will be at 25%?
Yeah, we had clarified this in the stock exchanges, number one. And whatever we were trying, it was in the interest of the project, it was in the interest of RVNL, it was in the interest of government, and it was in the interest of the nation.
Okay, got it. So, Mr. Prasad, good morning. You said a train set.
So let me complete this. Let me complete this answer. You had asked about the roadmap. So now the next step is the execution of MCMA. MCMA is the maintenance the manufacturing agreement. And the first prototype, the coach is to be manufactured at Latur within 2 years. And the second, 2 months after that, 2 years. And subsequently, 12 numbers in the first year, and then 18 next year, and then 25 onwards every year. So, and the maintenance part will be taken care of at Delhi, Jodhpur, and Bangalore. So we are going to upgrade the infrastructures at Latur, where we will be manufacturing, and some of the depots in Delhi and Jodhpur and Bangalore, we may have to upgrade that. So this is the roadmap of this, and this has got a maintenance component of 35 years. Yeah.
Okay, got it. So two questions. One, so total value over the lifetime, including manufacture and maintenance, is how much, sir?
See, if you see the total cost of the project, it is around 35,000 crores, 36,000 crores. Out of that, 8,700 crores will be our share.
And you said, sorry, what is your share?
25%, so it is 1/4, so it will be around 8,700 crores.
All right. And you will make 4%, as you said. Your margin.
The 4% is the maintenance component. See, the 120 train sets will be manufactured at Latur, and then these 120 train sets will be maintained for 35 years at different depots. The names of the depots I have just now said. And the average cost of that particular maintenance component will be 4%. So 120 crore, 4% for 120 train sets. This will continue over a period of 35 years. So if you want to see the total numbers, so 120 trains will be around 15,000 crores. And more than 4% into 120 into 35 years into 120, that will be around 20,000 plus, and it makes around 36,000 crores. This is a rough calculation which I just wanted to give.
Okay. Mr. Prasad, lest we run out of time, I have to ask you about the OFS as well. The government has reduced its stake by about 5.5%, 5.3% to be precise. Have they given any indications to pare their stake further? And if you can just help us what the response to the OFS has been?
See, I'll take few seconds before coming to your questions. This company is 20 years, 6 months old, and it has an authorized capital of 3,000 crores and paid up share capital of 2,085 crores. The first IPO came in the April 2019, 12.16%. Then OFS 1 was 9.64%. Now, during that time, approval was taken for 15%. So the remaining part was 5.36%. So this time OFS 2 was 5.36%, which had an option of 1.96% through Green's Sue option. So the floor price was 119, and the money which has been collected through OFS 2 was 1365 crores, more than 1350 crores. And earlier IPO was 475 crores and OFS 1 was 550 crores. The response was very positive. You can see the tweets made by the Secretary Deepam sir. He had also said that this has been very, very successful. In fact, in first day, the subscription was 2.73 times the institutional investors. So what I want to tell you is that we are serving the nations through this.
Mr. Prasad, I agree. Yes. I just, one more question. I mean, any indications of whether the government plans to bring down their stake further?
See, madam, the first requirement was the MPS. What exactly is MPS? This is as per the SEBI regulations. That is the minimum public shareholders. That minimum should be 25%. So we have crossed that barrier of 25%. To be precise enough, it is now 72.84%. And further decision will be taken by the Government of India, Ministry of Finance and Ministry of Railways. We have got no role to play in this. But what we want to do is that we want to create more and more infrastructures. We want to serve nation in a much better manner.
Mr. Prasad, exactly. I want to go back to that point because in this conversation earlier, you made a point that whatever you were trying to do, that is increase your partnership in the JV, was in the interest of the nation, in the interest of infrastructure creation. I want to go back. That's not happened. Your stake in this JV remains at 25%. So I want to understand, yes, we know all the details of the present Vande Bharat order, but have all the outlier things been settled? Because you wanted something, you've not got it. Now you're going ahead with the present 25%, 70% sort of structure. And what does it mean for future contracts and the future of this partnership itself with the Russian entity?
See, you please try to appreciate this, that the MOU was signed with the same percentage. And some news came up, and then we made the clarifications. And we had signed the shareholder agreement as per the MOU. So this is as per the plan, and the project is on track, and we will deliver the best quality product for the Indian Railways and Government of India. This much I can assure you.
Got it. And we take your point of view. Those were news reports, so you never.
It was a news report, but we clarified.
Correct. Exactly. That's what I'm saying. I'm saying it was. I mean, there was no flip-flop on your part, on the company's part. You were at that share. There was speculation. Maybe you were negotiating for a higher stake, and now you kind of put out where things stand right now.
But whatever I have said, it is perfect, that it was in the interest of the project, it was in the interest of the RVNL,
absolutely.
It was in the interest of Government of India, and it was the interest of the nation also.
Got it. Mr. Prasad, what is the order book now, sir? I don't think we've had an update.
So the order book has now gone up. We have got around 65,000 crores. 35,000 crores is through the nomination. And the bidding part has now gone up to 30,000 crores. And if you realize that we have started participating in less than 2 years, we have participated in 169 bids and total costing around 95,000 crores. And we have got 30,000 crores. Few bids are yet to be finalized. So the success rate is more than 25%. And we want to have a target to have the order book of 75,000 crores to 1 lakh crores. So we are coming nearer to 75,000 crores.
That's on. What's the timeline? And this is the bidding projects that you're talking about. 75,000 to 1 lakh.
I'm talking about the total order book of 75,000 crores to 1 lakh. And bidding is 30,000 crores. Madam, you please kindly realize that this is a government company. And we have molded ourselves, and it is less than 2 years that we have
Sure.
gone into the market and we are executing the projects, and we have got the orders of 30,000 crores from the market.
Sir, if you can just tell us a little bit about the Mumbai Metro order. What's the latest on that? What's the quantum, the timeline, execution, etc.?
See, we are executing 6 to 7 cities, the metro cities, and metro segment is one of the preferred segments. And we are involved in all kinds of the basically projects life cycle of the metro segment, starting from the depot track, the civil engineering, the system. So Mumbai Metro, most probably it was the system tender. I do not remember exactly. The biggest order of the metro is from the Chennai Metro, where we have got 4 orders. One is the elevated and 3 the underground packages. And the first order which we got from the Indore Metro, and that particular project is also moving very well. And the first overseas project of Maldives is also moving very well. So what I can tell you is the projects which we have started bidding and got in the beginning, they have started giving the results. And the margins, etc., are also as per the previous margins available. And we are very much satisfied the way we have progressed. And 2 months back, we have also been given the status of Navratna. So congratulations to all the esteemed TV viewers, because after that, we have not interacted. So, so everything is moving well, and hope to see better improvements in time to come.
Absolutely, Mr. Prasad. Congratulations to you as well and to the entire team. And you have ambitious targets ahead of 1 lakh crores in the form of total order book. So good luck with all of those plans, and we hope to keep talking to you as we progress along down the year. Thank you very much for joining in today.
Thank you very much. Thank you very much.
Thank you. Okay, with that, let's move on to our next management call. Equitas Small Finance Bank is on our radar. The business momentum for the first quarter has been strong, with profit coming above estimates. However, slippages have seen a slight increase. The margin has also dipped a bit. Mr. P.N. Vasudevan, MD and CEO of Equitas Small Finance Bank, is with us. Mr. Vasudevan, thanks for joining in. First, to the positives. I mean, if I talk about the business momentum, your AUM has actually grown 6.25% quarter on quarter. So that's very good sequential growth. There's good deposit momentum as well. Do you think this can continue into the rest of the year? What's the sense you're getting in terms of business momentum?
Good morning. See, Equitas, as we have been saying in the past also, we are lending into segments which are, kind of from the informal economy borrower segments, which typically do have a large level of unmet or underserved, demand from the banks. So that way, there is generally not much of an issue from the demand side. It's largely from our ability to service it in an efficient manner. That really determines our ability to grow. And so we have been guiding for a 25 plus kind of a % growth rate in the past. And I think that's something that we should continue to be able to look at. First quarter was a little stronger than normal, largely because the last year first quarter was not very strong. So on that lower basis, the growth is appearing to be 36% year on year. But we expect that this year, our overall growth rate should be in the range of 25 to 30%.
Okay, 25 to 30% growth rate is what you're looking at. I do want to also talk a little bit about the slippages, because they remain elevated in Q1. Can you give us some guidance on that? I think there was a 12% rise that you saw in your slippages this time. From an average of around 200 crores plus, what do you think the slippages could be in the subsequent quarters? And any relief on asset quality that one can expect?
See, our slippages are actually quite under control. I would say it's around that 3% level. Last year, if you remember, it was in the range of around 4.5 to 5% level. It's actually come down in the fourth quarter. Fourth quarter was the best. And first quarter, we all know seasonally is supposed to be the weakest quarter in terms of collections. But actually, our first quarter collection was much more robust than the typical first quarter that normally that we have seen in the past. So our first quarter collection was good, and our annual slippage at just under the 3% level is actually quite comfortable, I would say. And also, the way we calculate slippage is like on a daily basis. So if somebody slips into an NPA today and pays it off and squares it up tomorrow, we still show it as a slippage and a recovery. So I don't know whether that could be an impact, but even otherwise at 3%, I think we are very comfortable with that. And from a portfolio quality that you mentioned, our GNPA has kind of remained flat at 2.6% quarter on quarter. And again, I think that's a good good show by the team. because normally we have seen the first quarter that the GNPA does tend to rise up a bit and then come back in the subsequent quarters. But this time around, everything has been good. The market has been good. The economy is actually doing well. So we have also seen that impact from the customer side. The earnings has remained robust, and actually our GNPA has remained flat, which I think is probably the first time that we have seen in a long time.
So, Mr. Vasudevan, what's the outlook? I mean, are you saying that even if slippages rise, the max it will be is 3%? And can you give us some guidance on the GNPA levels as well?
Yeah, I guess the slippage should be in the same range. I don't expect it to go much beyond this, give or take maybe 10 basis points this way, that way. And from a GNPA perspective, pre-COVID, our GNPA used to be 2.5% level. We are now practically close to that at 2.6. And going forward, I think for the rest of the year, given the kind of macroeconomic factors that we have seen playing in the market, I think our GNPA should be in the range of 2.5% for the rest of the year.
Okay, 2.5% range for the gross NPA, so lower than what you've seen in Q1 and lower than what you've seen last year. That's always great to hear. Now, if you look at the book, right, the microfinance book has seen a very strong growth. It's a 40% growth that you've seen. Of course, the base is also lower, but is this something that you can sustain in the quarters to come?
See, microfinance, there was a change from RBI about a year back in terms of regulatory framework for microfinance. There is always a large concern amongst all of us in terms of over-borrowing or over-leveraging by the borrowers, because the RBI guideline was addressing the NBFC MFIs, but it was not addressing the banks. So customers could potentially borrow from NBFC MFIs up to the max allowed by RBI. And then on top of that, they could again borrow from the banks. This was about a year back scenario. About a year back, RBI came with a guideline, fresh set of guidelines, where the entire exposure of an MFI borrower is capped, irrespective whether it is from an NBFC MFI or from the universal or the small finance banks. So that has given us also some little bit of a comfort that the overheating or the over leveraging by the borrowers is not going to be as much. And so that is why we kind of, allowed microfinance to grow a little stronger than in the past. Today, microfinance is about 19% of the book. And by and large, we expect that to remain at that 18% level by the end of the year, which means that microfinance should grow at the overall level at which the bank should grow and retain its contribution from maybe 19, it might come down to 18 by the end of the year.
Okay, got that, Mr. Vasudevan. Just a quick final word. How is cost of funds moving? Because margins have come down. I mean, even if I look at it quarter on quarter, from 9.1%, you're down to 8.76%. So there seems to be some amount of pressure there. What's the outlook for the rest of the year on cost of funds and NIMs?
Yeah, so our portfolio, almost 83 or 84% of our portfolio is on a fixed rate basis. And so you are going to be seeing this cost of funds and the NIMs moving fairly aligned, I would say. And our cost of funds has gone up to 6.93% in the first quarter. And we believe that, based on our own internal calculations, we believe that our cost of funds might actually move by another 50 basis points for the rest of the year. And when that happens, the NIMs should see a reasonably proportionate decrease also. So last year, our NIM was around the 9% on an average for the full year. This year, we expect the average NIM for the full year to be anywhere in the range of around 8.5%.
Okay, all right. We will let you go on that note. Appreciate your time here. Thanks a lot for joining in. That's Equitas Small Finance Bank. We will take a quick break. On the other side, Murli M. Natarajan, the MD and CEO at DCB Bank, will be with us to discuss the Q1 performance. Stay tuned. Okay, well, the stock on our radar this morning is Motherson Sumi Wiring India business. They saw a decline in their net profits in Q1 FY24, but the company has outperformed the market leaders in the passenger vehicle space. We spoke to Anurag Gehlot, the CEO at Motherson Sumi Wiring India, on the company's Q1 performance. He said they will continue to maintain this growth rate and it will be a good year for them. Listen in.
Year on year, the growth was there of approximately 7% and of passenger vehicle, and quarter on quarter it has gone down, but MSWIL has done 11% and outperformed the market. And for the Q2 also, we are seeing a good forecast in hand. Obviously, festivals are going to start by the quarter to end and starting the Q3. So we are seeing a good numbers compared to Q1. So I think it is going to be good we can see the next, not even quarter 2, quarter 3 also we are seeing that the forecasts are high. So I think we are going in the right direction. There are a lot of positive vibes from the market. So I think it is going to be a good year. These are numbers are also driven by the customers. So whenever the customers are giving their numbers, we are just following those numbers. As far as you must be knowing that there are few issues at customer and also in their supply chain. But as a MSWIL, we are always on the toes, and we are making us ready internally to, in case of any changes in the plan, we are taking care for that. So we are driven what customers are asking us to do. Sequentially, we are improving. As you said, quarter 4 was 11.9%, and which has now in quarter 1 is 11.1. Historically, quarter 4 remains higher side because all your customer negotiations completed at that time. So it remains, on the higher side. But margins we are not talking about much because this is not the thing which we target for. We always look for the ROAS, which is capital employed, and as a group philosophy, we have to be more than 40% ROAS, which we have done in last financial year, and we are absolutely on the right track. And you will see in this year also we'll be surpassing this.
Okay, well, that's Motherson Sumi Wiring. Well, you got the market, which is absolutely flat, 8 or 10 point change, but higher, 19,654 on the index. Another company which is reacting to numbers in a very large way is DCB Bank. I mean, the stock is down, I think, 5.5–6%. Numbers have been a little mixed. So while loan growth and deposit growth, etc., have been pretty decent, slippages have gone up. And recoveries have been a little poor. That's basically led to gross NPLs rising. We also have margin compression of some 35 basis points on a quarter-on-quarter basis. So let's actually get the management in to address some of these issues. Mr. Murali M. Natarajan is Managing Director and CEO at the bank, and he's with us. So Mr. Natarajan, good to have you with us here. Thank you very much, sir. Could you explain to us, could we start with margins first of all? It's a 35 basis point compression. What are we to expect for FY24?
So we have built the business model, and I've been guiding this for quite some time, at a margin of about 370 to 375 basis point. This quarter our margin is 3.83. So I can argue that our margin is still higher than the business model that we have created. Cost of funds have been going up since, I think, almost October. The methodology works like this, that when EBLR is changed based on repo rate changes, cost of fund takes a little time to catch up. In more recently, cost of funds have not been raising so fast. So I don't expect similar kind of compression in our margin, and we should be able to hold on to our business model NIMs. More importantly, most of our portfolio is repriceable portfolio. So therefore, even if the cost of funds goes up, I don't believe that our margin compression would be severe. So we should be able to sustain with the product mix and the cost of funds mix at about 373–75 basis points.
Okay. The business momentum has been quite steady, Mr. Natarajan, and that's good to see. Of course, the entire industry is picking up pace now. But what kind of deposit and advances growth are you looking at for FY24?
So we don't give guidance on a yearly basis, but the kind of frontline investments we have done, including the number of branches that we have added in the last 1 to 2 years, and the kind of products, plus the process improvement, the technology that we are putting in, we believe that we should be able to double our balance sheet every 3 to 4 years. That is the kind of momentum we are building. Our deposit growth has been about 22 odd %. Our loan growth has been at about 19%, but if you look a little deeply, the core products like mortgages, home loan, co-lending, construction finance, agri-inclusive banking, which is our core business, has grown at higher than 20%. So we expect this trend to continue. There is a reasonable amount of demand, and we are putting in more efforts in terms of expansion as well as increasing our frontline. So that should help us to continue to grow our balance sheet and deposits and loans.
Slippages were higher in the quarter, I think about 4% as compared to 3%, the quarter-on-quarter comparison. Could you tell us what happened and what should we expect going forward?
If you look at our collection efficiency, there has been a slight drop in April, and when we look at more details, it seems to be a slow first quarter, also number of holidays in April, plus some weather interruptions in the north. All that put together has given us some kind of a lower collection efficiency in April, which we built up by May and June. If you look at our June collection efficiency, we are pretty much back to normal. The recoveries and upgrades is where we had a little bit of slowness, and we are building pipeline of recoveries and upgrades. If you look at whole of last year, our recovery and upgrades were almost 100% of the slippages. And I believe that in the next 1 to 2 quarters, we should rebuild the momentum in recovery and upgrades while slowing down the NPAs. We don't see any fundamentally any issues with our portfolio. And I also want to say that more than 85% of our portfolio is secured business. Therefore, the loss given default continues to be well within the range that we have kept in our business model.
Your cost to income ratio has been around that 64% mark in the quarter gone by. Can you give us some guidance on that as well as on the operating efficiency?
The target cost income ratio is about 55%. The target cost to average is assets is about 2.4, 2.5%. It will take us some time to reach there. I want to say that we are a pure retail SME business, so we don't do much of big ticket business. If you look at the market, whichever banks are in largely retail and SME business, you do see cost income ratios at 58 to 63%. So I don't think we are too different from that. Having said that, through technology, process improvement, and also because of the growth that we are likely to achieve for the investments we have made in the last couple of years, we expect cost income ratio to come down step by step.
Got it. Mr. Natarajan, on asset quality, would you like to leave us with a guidance for the year? Where would you want to be, or where would you be?
We don't give yearly guidance. If you look at the target that we are setting for ourselves is 2.5% on GNPA and 1.25, 1.5% type of on net NPA. Over time, we should do better than that. If you look at the pre-COVID, our business model, we were at about less than 2% on gross NPA and about 1% on net NPA with a strong provision coverage, which continues to be so. So our intention is to steadily move towards that direction, and that's where we are working towards.
All right, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. That's DCB Bank. By the way, the market is so quiet, not too much happening. Just a couple of these power stocks, NTPC, Power Grid, all doing pretty well this morning, up almost about 3% and metals also doing well. Mitesh Thakkar is back with us. Mitesh, 2 pockets that I wanted to ask you about. One was the entire auto group, because you have, auto sales coming out tomorrow. There's some lackluster moves expected in, passenger vehicles, etc. That's one. And within that space itself, your thoughts on Maruti, because Maruti comes out with earnings later today. Just wanted to do a chart check on these names.
Yeah.
So one, I think, Maruti, if you look at it, the stock has made a fresh high of 10,036 and then came down to levels close to about 95.50. I think the zone of 9,500, 9,550 is filled with support areas. If it doesn't break that, then I think the stock will again try and retest the earlier highs. The pivot here is 97.90. So once it crosses that, I think a long trade can be taken with a 100-point kind of a stop loss, and then we can look at a target of 10,200 plus. So I'll keep a watch on 9,500 on the downside and 97.90 on the upside. The Nifty Auto Index, has done very well, and it's been one of the outperformers in the last leg of the move. But last 3-4 days, it's given signs of tiredness at higher levels, similar to the index. I think it's looking a situation when the profit booking will see the Nifty Auto Index consolidate. And on the downside, 15,250 could be tested, and on the upside, 15,700, 750 would be a difficult pivot. So I think it will be consolidation for the next few days. Coming to my stock calls, I have a buy on NMDC. Keep a stop at about levels of around 112.6 here, and a target of around 117 can be looked at. And India Cement is the other one, which I would recommend buying with a stop below levels of 214 for targets of 227.
Okay. Mitesh, thank you very much. We'll come back to you for more. Let's look at just one name before we take a break, Thangamile Jewelers. And that was the big gainer from last week. It was up almost 55%, Friday to Friday. It's up another 6% this morning. That's almost a micro cap, very small market cap company. But Thangamile is up another 6 after the 55% over the previous 5 trading sessions. We'll take a quick commercial break here. We are back. We'll have the management of StoveKraft to discuss their first quarter performance. Stay tuned.
Well, flat on the Nifty, really, it's all about individual companies and stocks. The mid-cap index is doing much better. Even the Nifty, even from the lows of the morning when we opened up, it's been a steady climb up. So far, so good this Monday. The next company on our radar is StoveKraft. Numbers look pretty all right. The company managed to maintain the margins, even as inflation pressures cooled off a little bit. The company saw a lot of steady growth in its small appliance segment. In fact, that's the segment that's led growth with about a 60% improvement year on year. Their induction cooktop segment was also a contributor. And the most heartening factor of the StoveKraft numbers was actually the improvement in gross margins, a 400 basis points improvement in gross profit margin. So let's see if we can connect with the management. Okay, we don't have Mr. Rajendra Gandhi. We should get him in a bit. But in the meantime, let's focus on some of the moves and shakers in the mid-cap market, which are moving beyond some of the earnings that we've mentioned. By the way, look at BLS International. Stocks up about 8 to 9%. So even beyond earnings, today you're seeing a fair amount of a leg up. Ujjivan Small Finance Bank, of course, is earnings-based. That's up about 8% as well. NBCC has perked up. Some of the other railway stocks, IRFC, we spoke to RVNL just a while back, but even RVNL is up and about. So it's really the mid-cap market, which is where all the action is today.
Oh, absolutely. And even Gland Pharma, right? They got that US FDA approval.
Yeah.
So that stock is up almost about 4%. So I take your point entirely. It is a very good market. I mean, don't let the headline index fool you. The headline index is flat. But beneath the surface, the mid-cap index is now up almost 0.5%. And take a look at the advanced decline ratio. We haven't seen this kind of market breadth in very long. At least at the start of trade, you have over 2,000 stocks on the advancing side compared to just 800 on the declining end. Just a couple of more stocks. By the way, Ujjivan Small Finance Bank is the stock of the moment, 10% higher on that one. But I think we have the management of StoveKraft.
Yeah, Mr. Gandhi is with us now. So let's talk to him about that performance. Mr. Gandhi, thank you for joining in. So 8% growth on the top line and a 400 basis point expansion in gross margins. So let's start with that huge margin expansion. That's not at the EBITDA level, but at the gross profit level. How was that achieved and is that sustainable? And also on the EBITDA margin, which you've maintained at around 8%, what's the look ahead?
Yeah, there has been multiple factors that is helping us on our gross margin, while our endeavor is to be higher in the range of 35%. There has been a softening on the input cost and some new introductions which have moved to manufacturing. There are phases where we introduce products, then assemble them and manufacture them. Many of these products have started contributing meaningfully, and so it has given us an uplift on the margin, and it is very closer to our aspired margin.
Mr.
I think going forward, we will remain in this range of 35%.
Okay, 35%. Mr. Gandhi, exactly 2 months back when we spoke with you, you had said that demand overall remains very weak. Would you want to, how have things changed, if you can talk to us about that? Are things looking up?
Yeah, see, the calendar for the festivals has actually moved this year. So generally our business is more skewed towards the second and the third quarter, where more of activity happens around the festivals. And the first and the last quarter are relatively smaller. And so the demand scenario still continues to be muted. We believe that post the beginning of Onam, things should stabilize and then demand should be back to normal. But currently it is muted.
Okay. So I didn't get that. When you say demand scenario is muted, what does it mean in terms of revenue growth for the full year, both FY24 and FY25? Are we looking at single-digit growth? And what is your outlook on margins?
Our growth comes from 3 factors, primarily, of course, existing product category, new product introduction, and the channel expansion. We are expanding our retail. We are seeing very good traction in our retail and very, very confident about our retail model. So we are seeing very good growth there. New product introduction has given us good growth even during this soft period. And when business resumes to normalcy, that is when the festivities kick in, even our existing product growth, we believe will contribute. So overall, for the whole year, we don't see any challenge on the demand side. But between this last quarter and the first quarter of every year, we see that demands are normally soft.
Okay.
Yeah, we continue. We believe that we will be able to grow on double digit, at least a double digit growth for sure.
That's double-digit volume growth, or are you talking about double-digit top-line growth this year?
So we believe, of course, this year the cost side has been favorable to us. So all that growth we want to relate it to value growth. We believe, of course, the volume growth will be higher.
Okay, so volume growth perhaps even better. Just a quick word on the product mix. What is the target for the company as you look at overall this year? Because the small appliances, they seem to be working very well for you, and you've got a lot of growth from that side. But the cooker segment, for instance, at least this quarter was flat. So let's say by the end of FY24, what will be your targeted product mix?
These three categories contribute to the revenue of the company. The cookware, that is the pressure cooker and the non-stick cookware, we continue to grow. There has been a shift, as I said, in the sales. And on the cooktop business, both induction cooktop and gas cooktop. And the gas cooktop particularly, we grew on volume, but there is a change in the mix of the sale. And we are seeing very high growth in our appliances business. There are a lot of appliances that we have moved to manufacturing, either to which we were importing in the past. There has been a huge advantage. We also introduced some new products which are, for the segment that we operate are very aspirational, and we have made this affordable. And we are seeing very good acceptance and traction in these products. We believe in the appliances business will continue to grow, and in the years, all these three will be at the similar level. In the past, our appliances business used to be smaller of the two. I think going forward, appliances will also contribute as much as our cookware and the cooktop business.
Sure, sure. All right. Thank you for joining in and all the best. Demand is muted, but I'm sure it'll come back in a big way given that things are improving now. We'll slip into a quick break. On the other side, our special segment, it's the economy. Lata will catch up with V. Vaidyanathan, the MD and CEO at IDFC FIRST Bank, to discuss the company's Q1 earnings. Stay tuned for that.
Well, markets are still dithering a bit. One would have expected today that things would be up in a way, given the boost from the US markets, but it's been a little so-so. However, some of the stocks are standing out for the performance of their Q1 numbers, and among them is IDFC FIRST Bank. That stock has done reasonably well. The numbers are pretty good. Actually, it's a many splendored result, you will have to say. Loan growth at 26% year-on-year and 7% quarter-on-quarter. Net interest margin only marginally lower. Net interest income rising by 36% year-on-year. So, it is a many splendored result. Joining us now is Mr. V. Vaidyanathan, Managing Director and CEO. Mr. Vaidyanathan, good morning and many congratulations. It's not like a journalist to start with so much praise, but it is deserved here. So let me start with the only one difficult part of your result, the pretty high cost to income. Any plans on how you are bringing it down? If you could do that, then you can see your ROE perhaps going to 13, 14, really surging. Why is the cost to income high and what are your plans to bring it down?
First of all, thanks for the question, Lata. It helps us to clarify. See, basically one fundamental thing all investors should take note of the bank is at a setup stage. So whether we're building the mobile banking applications, setting up the branches, setting up ATMs, putting out new products like gold loans or education loans, everything has set up costs. So while an established bank maybe built 20, 25 years ago, they built all that many years ago and today they're reaping the benefit of that. So this is the fundamental reason why cost income ratio of the bank is high. But let me tell you, directionally, it has already come down from 95 to 72. It will come down. We should, we should be patient with us.
Okay. No, of course, which also explains why your OPEX is high, growing 37%.
Well, OPEX has grown for all banks, I think, because a lot of expenses to incur, I think for the system as a whole, because of technology and all that. But I think specifically for us, it's still a setup stage. Remember, our deposits are growing by 45%. How is it growing? We've got to put something out there in terms of branches, network, etc. So, and we need that money because we have to repay a high-cost borrowing, which is costing us 9%.
That's the point. Okay, then that brings me logically to the next question on margins. Just an 8 basis point fall in margins is actually very creditable because we are already in a rising interest rate and rising interest cost scenario. Do you think you can hold it here or will it slip more for precisely the reasons you're saying?
See, we have one advantage, Lata, that our repo-linked loan book is only 24% of the book. So even if repo rates were to start coming down, let me say in due course, which I think it will, that year from now or whenever, our bank will not be much affected. Our entire repo plus MCLR book is only 39-40%. So we have some automatic cushions built into it. The second cushion that is built for our bank, which is rather unique for our bank, considering the situation, is that we have that 17,000 crores of money which we are paying. We're paying 5,000-6,000 crores every year. So that is giving us a lift. Otherwise margins should come down for the reasons we know. So they have a bit of a countervailing effect of each other.
Okay. What is your expectation in terms of asset quality? It's certainly improved, but we get this repeated sounds of alarm from unsecured credit. Some of the banks are already showing a bit of a disturbance, banks and NBFCs more. Do you think you'll be able to manage with even lower credit costs and even lower GNPA?
See, as you know, in credit, the asset test is end of the day how much the credit cost, basically the provisions. Now that number is really very low for us, I think. And our gross NPA is only 1.53%. Our net NPA is only 4 or 0.45. So this is very low and credit cost also low. Now but the question is a fair question, and I use this opportunity to explain to all the viewers how a bank is managing such low NPA lending in our retail segments. There's only one and main reason for it. We lend to cash flow. It's very important, Lata. It's not against anything else. It's against cash flow. So imagine you saw a bank account and you saw money in the bank, say ₹1 lakh. Then we give an EMI of only 50,000 rupees. And naturally, EMI will clear. So we are very good in assessing cash flows. And that we believe is a bigger security. And frankly, we use that whether for secured loan, unsecured loan. This is the philosophy we follow. That's why for like 13, 14 years, our NPA is always so low.
Okay. Well, actually, you should tell us the secret of your deposit growth as well. It's a fairly strong deposit growth for a bank that does not have so much by way of margins. what would be the, what's working so well for you?
See, as you know, we dropped our interest rates by 300 basis points, not like small amount, like 7% to 4%.
Exactly, and in spite of it, these kinds of margins.
Yeah, in fact, that helped the margins, of course. But then up to 10 lakhs, we are paying only 4% today, which is not very much premium over the big banks. But still, deposit going by 44. I think when we assess this situation, there are two reasons we think about it. We are really crazy about customer service. We tell our people day in and day out, service is everything for us, and so on. You know, things that really upset me, but only service will upset me if I find something going wrong in the bank.
Okay.
So that's one. Two is that one key inflection point in every bank's life, it happens when we pivoted to becoming a brand, a good brand. That pivoting is happening for us. It's a very important thing. You think of bank like ICICI Bank, HDFC Bank, they're phenomenal brands. But someday they pivoted to becoming a big brand. I think we are in that kind of inflection moment.
Okay. Yeah, I mean, I would agree with that. What I meant was not margins. The fact that, you have to work harder for deposits would mean you have to pay more than others.
No, we don't have to. We are settled. We have no intention to raise interest rates from here on. But still, we are confident of raise. We feel, I can't use the word confidence with any amount of, I should be careful with that. But let me say we are comfortable to guide that our quarter-on-quarter deposits will continue to grow from here on, at least for the foreseeable future, maybe for 4 to 6 quarters.
But with such a strong growth of... Sorry, go ahead.
It's very strong. Wherever we open a branch, for example, any city, for us, frankly, deposit for us for the taking. Because we just have, maybe 800 branches. If we put 100 more, wherever we go, like a gush of oxygen, deposits come to our bank. There's something very powerful about a brand, Lata. I think people have not, experienced it yet or discovered it yet.
Okay, that's very good to hear. Extremely good to hear. Would you, if with such a strong growth of both deposits and advances, you will have to raise capital sometime soon? I mean, it's very good now, but still the growth is very strong.
No, definitely. I think by end of this year, we plan to raise 3,000 crores. So our capital adequacy is touching 17% already. We still raise 3,000 crores by end of this year.
Would you ever look at inorganic opportunities? I mean, there are still a lot of southern banks which are, well, not quite proprietor-led, but by a few communities. Would you look at inorganic expansion, even NBFCs?
Well, we are a commercial entity and we should be on the lookout all the time. There are, if you notice, the key thing for the bank to address is actually cost-income ratio. And therefore, any organization that is very profitable in operating profit sense, we will be interested.
Okay. Can you give us a little more category on what you would be interested? Would it be MFIs?
It's not, we don't have a plan to look out anything like that. But certainly, let me say, any institution that is already up and running has a strong operating margin. That's important. Even PSL, we are planning to build a PSL book. Today, we are short on PSL, self-originated PSL. We, against a target of 40%, we originate only 32% on our own. By the way, this was like 15% or something a couple of years ago. It's caught up, but still, it's only 32. So we are short. So we are either buying or we're lending to MFIs and meeting the requirement. So we want such assets which can deliver PSL, can deliver profits. Other than that, frankly, if we do nothing also, we are pretty good. If you grow the way the bank is growing the next 3-4 years, you'll be surprised.
Okay. No, I just wanted to know if we should hear something in terms of inorganic growth this year itself, like FY24.
No, nothing like that. Nothing on the horizon.
Nothing on the
through your channel, I'm putting out messages out there effectively that, we will.
Okay. All right. Let's get some numbers. I heard in your conference call, you all are expecting about a 25% advances growth. What are you guiding in terms of margins?
We guide for like 22 to 24. That's a safe guidance for us on the loan book side. Today, our retail book is growing faster than that. And that's because the wholesale book is still, flattish. come forward, when the wholesale degrowth stops and infrastructure degrowth stops, then retail itself will stabilize at 25-ish. It won't like go gangbusters. So, and we believe that if it grows steadily at this rate, it should be good enough. On the margin front, Lata, like I said, there are countervailing factors. I said at the beginning to you. There are some factors which should actually lift our margin, some factors should bring down a margin, like FD rates repricing. Blend, 5 to 6 basis point reduction from here should be expected. But frankly, these things don't bother us, Lata, because you're looking from a quarter to quarter. I'm looking from a decade from now about how to build the bank in the long run. These things don't matter. It's for us to more important to build it more stable and think long.
Okay. No, actually, 5 or 6 basis points from here on is not going to make a big difference at all. Even from quarter. Yeah. Just a final question. Where are you seeing growth in terms of loan ask?
Small entrepreneurs is a big one. If it's a small and medium entrepreneurs, there is a very big demand coming up there. I think because of the government kind of investment happening in CapEx at 10 lakh crores and all that, even economies catching good steam. That is one big area for us. It's growing very well. And they are usually, it's a working capital financing. As a bank, think of an entire book as a working capital financing book. Because even if you give us a term loan, we are looking at the cash flow. When you have a working capital loan, looking at cash flow. So whether it's retail, wholesale, small entrepreneurs, large enterprises, we are in that space. And that is really growing well. No doubt about it.
Good to hear that because that's what the stock market seems to be telling us today. It's the mid caps that are small caps and mid caps that are doing very well.
And we are seeing it live. We are seeing it live in a day-to-day life. We are finding strong demand coming from there. Strong demand, and rural India is like totally underserved today. Totally, I can tell you. I don't know. India has been banking for 70 years, but the more I see rural India, more I'm surprised. There's no credit there. So just go there and.
So there's space for everyone.
Fantastically. Yeah. Our SMA, Lata, is only 0.85. Think about it. Not just forget NPA. SMA is 0.85. So these customers, rural India people, pay very well, actually.
Okay. That's very good to hear, sir. Pleasure speaking with you. Thank you very much for spending time for us, Mr. Vaidyanathan, and all the very best.
Thank you, Lata,
We have to wrap up on Bazaar on that note. Chartbusters up next.